Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for July 15th, actually July 16th, 2023. I hope you guys are all doing well this weekend. It's a hot one globally, and I know it is here, and I hope you all are staying cool. Look, we had a big breakdown in the US dollar this week, and we're going to talk about that and more. But before I go on, I just need to say, if you haven't tried out Forex Analytics, make sure you check it out. It's $1 for 10 days to try out Forex Analytics. Also, if you want to take advantage of Forex Analytics but learn how to trade our money, check out the Trader Funding Program and do that when you get a chance. All right, let's get into the markets and let's talk about the dollar. I mean, we had the dollar just really get hammered this week. You saw the CPI data which was what drove the US dollar lower this week, and then the nail in the coffin was really the PPI that came out on Thursday. That PPI data also drove down the US dollar. Initial jobless claims got a little bit better. They improved, so the dollar continued to slump on that news. When you're looking at the dollar breakdown, and I'm going to get to the dollar index, I'm going to pull that up first and foremost. When you're looking at the dollar index, that is a pretty solid breakdown. And, I think this weak data caught a lot of people off guard. I myself was trying to play long off of some support here. But when it broke down, when that data was too weak, I had to cut and reverse and go the other direction. Now, the interesting thing about the US dollar, though, we are near a really big critical Fibonacci support in the dollar, and that comes in at the 618 retracement, which is just a little bit lower than where we're currently at right now. And this is the broad dollar index. So will we have some support in the US dollar going into this next week? I think so, but the fact of the matter is it has broken down. So what we have to do is look at different currency pairs to see where those places might be, where we might be able to get short the dollar again on any type of rally, on any type of recovery. The one thing about the dollar index is in the dollar, if you look across the board, if you're looking at the euro, look, we had a really solid breakout of the triangle. So now any move back down, that's not what I wanted. Well, actually we can do that if you want. You can see we're at the 127% extension, but any dip back down towards 111 should offer some support at this point in time on any dip. If you look at the sterling, we're at channel resistance, but any dip back down towards 128.50 should also offer support on dips. There are certain currencies, like if you take a look at the Aussie and the Kiwi, that could be influenced by other things this week, which we're going to get into those charts in just a bit. Now, actually, I'm going to come back to the sterling, come back to the euro in just a little bit. But the one thing I do want to point out is this is a pretty big move, and the one thing that could actually turn the dollar back higher this week would be a move in the S&P. Now, I want to talk about the S&P because we did not get a reversal this last week. We pushed higher into the channel resistance, and now that we're at channel resistance, and also we are just pips away. You can see the high low here. We're just pips away from the 78% retracement, long-term retracement in the S&P. If we start to get a little bit of a pullback in the S&P, that could firm up the dollar, at least against certain currencies. You might see the dollar really strengthen against, perhaps the Aussie dollar, perhaps the Kiwi dollar. You might see the dollar just, start to firm up against certain currencies. The Canadian, which we'll have to talk about this week because we have CPI data coming out this week out of Canada as well. So that's the one thing I would be really careful with, just because if the dollar does start to firm up from here, or let's say it another way, if the S&P does find some resistance up here, then if that is the case, the dollar could turn around and it could start to form some sort of near-term bottom, especially that we're at such critical support at the 618 retracement. Now let's talk about some of the things that are happening this week, not from the economic calendar, but we do have earnings that could have a very big influence on the S&P this week as earnings season does kick off. So we have Bank of America, We have Goldman Sachs, Morgan Stanley, Johnson & Johnson, American Express. We even have a couple tech names like Netflix and Tesla. All right. And the reason why I wanted to also talk about that, and I brought up a chart for us to take a look at, is these are recessions going back way back into the 70s, right? You can see these recessionary periods. And the one thing that we should be paying attention to is if we are going to be in a recessionary period, if you look at the periods between, especially the great financial crisis, you go back to 2001, and COVID. I mean, did that really count? I don't know. I don't know if you really want to count that. But if you go into the late 90s, or excuse me, late 80s, early 90s, those are periods in time in the S&P where the markets actually really started to struggle, is when you go into a recessionary period. So that's what everybody's going to be looking out for. And that's one thing that we do have to be a little concerned with as we go into the second half of the year. If we do get in a recessionary type of period, if we're not in one already, the stock market usually has a negative reaction through recessions, and that's something that we should, like I said, we should be paying attention to. All right, look, so one of the things we'll talk about this week is the calendar of events that are things that are happening out throughout the course of the week. On Sunday night, we have China GDP. One of the things that I think you probably want to be paying attention to is the US dollar CNH. Let me pull that up really quick. If you look at the US dollar CNH, we've come down to the 50 DMA. Now, regarding the US dollar CNH, if we are in a if the market really starts to come under pressure, you're going to see the US dollar CNH probably go higher. China is going to try to engineer a little bit of a weaker currency. So I'd be watching the US dollar CNH carefully, especially if we continue to hold like this 50 DMA as support. Now, in China, we have GDP, industrial production, retail sales, fixed asset investment, capacity utilization. They have the 1-year medium-term loan rates. They're expected to keep that unchanged at 2.65%. But that's going to be happening Sunday night, Monday morning, obviously, if you're in China or in Asia. If you look on Monday, we have the Empire State manufacturing data in the U.S. that could move a little bit of the market. We don't have a whole lot of data this week because the FOMC is this next week, but we'll be watching that data as well. We have on Monday night in the U.S., but actually it's Monday morning in Australia, we have the monetary policy meeting minutes. Now, what we've noticed with the Aussie dollars, we did not break down. The bear flag did not play out. Got nullified when you got back above the 200-day moving average. And obviously with dollar weakness this last week, it just took the dollar to the woodshed, just pretty much across the board. Now, the thing about the Aussie dollar is we stalled at the 69-cent level, that key resistance. And that's something that we should be paying attention to, that the Aussie dollar really is struggling to make new highs, even though equities continue to make new highs. And so if I was an Aussie dollar bull, I'd be thinking about that, the failure to break above the 618, to get above this resistance. Could the monetary policy meeting minutes, break us out? It's possible, but I'd be more worried about it if it doesn't get above 69 cents. Tuesday, we have Canadian CPI. Now, one thing about Canada, and I'm gonna take you a little bit, I'm gonna do a little bit of analysis with you here, since we haven't looked at this chart. These aren't the charts that I use during the week. This is the charts that I use here with you all on the week ahead video. You'll notice that we're in a descending channel, and we basically hit a brand new low and then reversed hard, and we're back at this, previous support that acts as current resistance. CPI data out of the Bank of Canada is going to be very important because the BOC, like the US, is very data dependent. So if the CPI data comes in a little lighter than expected, we could be trading back up at the 50 DMA. If we get back above, and let me grab this blue line really quick, we get above 134, then we're going to see a much broader recovery, not only in the US dollar Canadian, but you're probably going to see a reversal in the Canadian yen. You'll see the Euro Canadian, which is showing a lot of life down here at these lows, you'll see that continue to rally as well. So a couple things you should be paying attention to regarding the Canadian currency. Also on Tuesday, we have U.S. retail sales. It's going to be very interesting to see how well the U.S. economy the consumer, is responding in this higher inflationary type of environment. So that's going to be watched very carefully on Tuesday. Tuesday night out of New Zealand, well, it's actually New Zealand Wednesday morning, but it's going to be Tuesday night for those of us here in North America. We have New Zealand CPI as well, and we're going to have to watch that very carefully, because you can see the Kiwi dollar broke above 64 cents very briefly, but all very key resistance for this pair. If we can't stay above 70 or 64 cents, then the risk is that we push right back down towards 62 cents, maybe this 200 DMA, which the 200 DMA and the 50 DMA really held as support. And when the dollar weak inflation data came out this last week, it was a launching pad for this particular pair, but putting us back up at resistance, we have to be a little more careful with it right now. And remember, if we're seeing weaker inflation data, across the globe, it could also tilt the RBNZ to be more dovish in the meetings ahead. Now on Wednesday, speaking of inflation, we have the UK inflation data, and I think that's going to be very important as we go into this week. Remember, the sterling is well above the 130 level at this point, and so any move back down, like I said earlier, any move back down to this 128.50, that's going to be viewed as really important, because not only is it a breakout point, but also it's going to end up being channel support. So if we break back below 128, 128.50, that could be really quite dovish, because there are pretty lofty expectations as far as the Bank of England, as far as rates go, and so a miss in UK CPI, below expectations, could have a very negative effect on the sterling, especially up at these lofty levels that we're at. We also have on Wednesday, we have U.S. housing starts. We have South Africa. We have South African inflation, which is important because the SARB, South African Reserve Bank, is also meeting on Thursday, and they're going to have their interest rate decision. Most analysts are expecting them to keep rates at 8.25%, but there are some banks that are expecting maybe a hawkish surprise. So the one thing I want you to pay attention regarding that is because there are some economists that are expecting the South African Central Bank, Reserve Bank, to hike rates. If they don't, we would see a reversal in the U.S. dollar, South African rand, right off the 200-day moving average. So keep that in mind. South African inflation on Wednesday, interest rate decision on Thursday, if you're trading some of these emerging market currencies. One of the things I did miss, and I'm going to go back to the Aussie dollar, is we have Aussie employment Wednesday night. So that's something that also we should be paying attention to, which obviously this 69-cent level is obviously key. A couple other things I wanted to mention this week. Like I said, it was going to be a fairly light news week as far as data goes. But I wanted to just take you into some of the other markets really quick. And I want to, since we do have earnings, but I want to go back to the DAX. The DAX, remember, we came out of an ascending wedge. Relative strength is still divergent. We're back up towards, those previous all-time highs. The underside of this wedge, too, which could offer some resistance up here. You just have to be really careful on the long side of the DAX because it is underperforming. Speaking of underperforming markets, I'm going to take you back over to Japan. Let me find the Nikkei. Oh, there it is, right above there. Here's the Nikkei 225. Now, watch the Nikkei carefully. I thought we might be developing, a flag here, but actually, let me just remove that. The one thing that we should be paying attention to here in Japan is it is just underperforming. It had been an outperforming market, kind of leading the charge, but there's risks. Oh, there's one other thing I need to mention. There's risks that, the Bank of Japan could tweak yield curve control. Now, on Thursday night, which is actually Friday morning, and I wanted to go over the yen anyway, there's the and we had a nice sell off to the 200-day moving average. The thing about Thursday night or Friday morning, we have Japan national CPI, and it could be a market mover since there are so many traders right now and institutions that are starting to anticipate that the Bank of Japan could make a shift in their yield curve control. That is something that, you know, could obviously move the market, especially if that inflation data comes in a little hotter than expected. You know, that could really, you know, get people speculating at that point. Also, I want to take a look at Bitcoin because Bitcoin is really not breaking out. I thought Bitcoin would be breaking out following the news of the, you know, the BlackRock news and the new ETFs that are coming out. Anyway, sorry, lack of trying to get my thoughts in order here. We couldn't break above this 50% retracement that comes in around 32,000. That's something that, you know, with risk rallying, why isn't Bitcoin, why isn't Ethereum rallying? Ethereum's stalled at the 78% retracement. And also one other thing that I need to mention is I need to mention gold, because gold, and I'm going to delete this here because this is, we haven't looked at this chart in a while. This particular chart on this show, gold, it has responded. We've seen a bit of a rally from support, okay? And we have an inverted head and shoulder pattern that really should play out. And then I'll draw it out for you really quick. Here's a shoulder, there's a head, there's a shoulder. And it should play out towards 1975 or so. But with the dollar as weak as it is, I'm worried that gold hasn't responded. And if the dollar really starts to recover this week, like let's just say, you know, equities come under pressure, maybe yields start to move and the dollar, you know, gets a snapback rally. If you're long gold, you need to be really careful. I think if gold gets back below 1900, that's going to be a very bearish event for the gold market. So nothing to worry about right now if you're long gold. It's just something you should really be paying attention to. You know, I almost forgot one indice before I let you go. But before I let you go, I just want to make sure I mention once again, if you haven't checked out Forex Analytics, make sure you do so. It's only $1 for 10 days to try it out, right? It's only, whoops, I didn't mean to do that. I meant to go over to pricing. It's only $1 for 10 days to try it out. Also, make sure you do check out the Trader Funding Program. Okay, let's get back over to the one last chart I wanted to get to. I wanted to show you the Dow because the Dow Jones Industrial Average is really stalled at some really big resistance. If you go back here and you think about, okay, well, the S&P's been moving, you know, the Nasdaq's been moving, the Dow really hasn't been. So keep an eye on some of these big, you know, resistance levels that we're probing. Now, obviously, if we break out in the Dow, that's going to give, you know, further reason for the S&P to rally. But if we continue to stall here, you might look at a bit of a reversal in the Dow. Also, the Nasdaq is at, let me just show you really quick. Something I wanted to show you guys and gals. We're at the 161% extension of that last leg lower right now. Now, one of the other things, and you just saw me delete it, but I'll just put it right back on. We're also just above the 78% retracement in the NASDAQ 100. You know, I was trying to remember what show it was that I was talking to everybody about this resistance, and I remembered it was the trade-off show with Chris Weston a couple of weeks back. He noted this as being pretty key resistance. I'm like, yeah, maybe we might even reach a little further to the 78% retracement. Obviously, we even went further than that, but we are at 161% extension. So if you know, some of these markets start to find resistance up here, you know, the NASDAQ, the S&P, the Dow, you know, I think that's going to have a negative effect on you're going to see some reversals from some pretty key levels in the event that does happen. We haven't seen any suggestions of that, but knowing that the FOMC is literally at the end of the month, we need to, you know, think that there might be a little bit of profit taking ahead of the Fed. All right, guys and gals, I want to say thank you very much for spending your time with me today. And my name is Blake Morrow. You've been listening to the Week Ahead video. If you like what you hear here, make sure you give us a thumbs up. Subscribe to the channel down below so you don't miss any of this free content that we put out for you every week. You have a great weekend. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.